Our tweets were moving the market on Bitcoin and Ethereum like by serious dollar amounts. Our tweets are moving the price of a multi-trillion-dollar asset? I don't think so. And we tweeted out, we're like, oh shit, we are moving the market. I mean, Bitcoin ETFs shot up to like 130 billion in early January. My main concern is just like,
meet James Seyffart, Senior Analyst at Bloomberg Intelligence, expert in ETFs and the broader fund industry. James has been at the forefront analyzing the monumental impact of recent elections and the evolving stance of the SEC on crypto assets. From dissecting the demand for Bitcoin and Ethereum ETFs to forecasting the next wave of altcoin approvals, he's your guide to how institutional capital is merging with decentralized finance, fundamentally redefining the future of investment in the new era. All of a sudden you became the big, main character of the space.
Yeah, I mean, that was fun. A lot of people don't understand that the Bitcoin ETFs were the biggest launch ever. Like, absolutely massive. Nobody's actually going to buy this thing. It's over 45 billion in net flows in a year.
It feels like it takes time.
It's definitely going to take time.
Who's buying now, and what's the current status of the Bitcoin ETF in general?
Great question. So two things. One,
now Trump is in the office for, I think it's 7 months. What has changed in terms of the ETF world regarding crypto and altcoins?
yeah, I mean, the short answer is everything. We could probably just stop there if we really wanted to, but that's really the long and short of it. I mean, what's changed most impactfully for the ETFs is that we have a new SEC chairman. Atkins, Gensler is out, and honestly, that's the biggest change. We've had a few other people that have left the SEC, but really it's the chairman change over there. Hester Peirce has been given a little bit more power there. Obviously, Mark Ueda was running the show until Atkins stepped in. But what that really means is it's a complete 180 from how the SEC was handling anything related to crypto, really. Like under Gensler and Biden, crypto was, a criminal enterprise, for lack of a, not completely that far, but like that's what it felt like if you were covering the space. And now they are just kind of trying to come up with rules. I mean, they're basically seem to be doing everything that when I was writing that I was saying they should be doing. They're trying to come with rules. They're engaging with the industry. They're trying to get feedback on like how these rules should operate, how we can fit in the current framework, what regulations need to be like potentially created, or what do we already have that we can use. And like none of that was being discussed. It was like, we don't need a framework. Everything we have works. Everything you've done for the most part is create a security, and we're not discussing it, and we're going to sue you into oblivion. So on the ETF side, it's gone from our job was trying to figure out what could possibly get through, and that's where most people know us in the space, calling when the Bitcoin ETFs were going to get approved, both futures and spot, Ethereum ETFs. And now it's kind of gone to what isn't going to be approved. Like, what is the framework going to look like for what's allowed in ETF? So it's like literally a complete 180 from us talking with the SEC and the SEC talking with issuers.
I mean, I see bonk ETF approval, or not approvals, but applications coming in for those things. And I'm like, whoa, that's completely different than like the past few years. But I mean, the only concern, like I'm a Web3 investor. A lot of our following is invested into the Web3 space, and Trump came in, and then everybody was like, yes, so now the big sort of adoption is going to take place. And in terms of price, we have seen a completely different market when it comes to anything outside of Bitcoin. But also in terms of approvals of ETFs, it feels like it takes time.
Yeah, I mean, one, it's definitely going to take time. Like, absolutely, it's going to take a decent amount of time. They're working towards it right now. I mean, final deadlines for most of these are in October. So, I mean, it's going to happen in 2025. Bonk isn't one of those ones that I'm talking about here, though. That's filed under, like, a different process that would use derivatives and things like that. And that's a different process to get approved. It's possible that gets approved, but I don't know if that would get approved under the spot framework that whatever the SEC is coming up with. And what you said about Trump is also true because, him personally and like his family has leaned heavily into this, which has almost been like a negative thing for the industry. Like, it's cool to say that the Trump and his family are leaning into this industry and they believe in it now, but like also it's like kind of looks like it's a grift still again to many people. They're like, I told you it was all a scam. So it's like, from my point of view, we went from this pendulum swinging from like, it should be in the middle, right? But like we were tilted way over this way where like everything was wrong and bad and nothing was allowed and people were leaving the country if they wanted to work into it. And Trump was coming in and was like, oh, we're going to swing way back more to the center. And honestly, what's happened is like we've kind of swung like too far to the other side, in my opinion. Yeah. I guess my opinion doesn't really matter that much, but it's almost like too much leaning into the space. Like it would be like, can't you just like do things and like leave the industry alone and just like come up with common sense framework, not also like try to do all this stuff? I know you want to make money, but like, come on. I don't know. That's my personal thing.
I mean, I think it was last week, there was a news article that came out in the Dutch media where the title was Trump made millions with crypto. And then they just like started calculating the profits of his Liberty Finance and everything with his meme coin, what he has done, which is the exact opposite of what you would like to see if you want to see the industry progress in general. But on the other hand, the past few weeks, we have the stablecoin bill that is getting pushed forward, which is, in my opinion, a very positive sign. How do you see that? Like, how is the interpretation from the industry when it comes to the stablecoin bill?
Yeah, so I actually have like a regulatory and policy analyst that I work with who lives in DC, who works and lives in DC. So he's the guy I lean on this. And even before Trump was elected, he was pretty confident that we thought we would get some sort of stablecoin bill through Congress early this year. So this was always kind of like expected to happen. And honestly, all the Trump stuff slowed it down, if anything, because people are like everything in there, like the people don't like it. And the Democrats are using Trump being involved as not getting through. It still seems like that's going to get through. Like we're very close. So that's a good thing. But then like you have the market structure bill for like broader crypto things. What's security? What's a commodity? What does decentralized mean? Like coming up with all these real legal and regulatory frameworks. Right now, I think the one in Congress is something called the Clarity Act. I think is the one that's leading the way right now. But again, they want to add stuff in there that would like say that Trump can't like partake or take advantage of it or make money in this space if he's going to do it. It's like the president and the president's family. And then the White House seems to have said that. This is what news reports are saying. So again, it's coming back up where like we really like this space needs a market structure bill. It needs it like years ago.
Yeah.
But right now, what's going to happen is, in our view, is the SEC and CFTC within the U.S. are just going to come up with some sort of generic framework. Probably it's not going to answer all the questions, but it's going to answer or at least come up with like this is our understanding instead of like I said, the last administration where it was just we're going to regulate via enforcement, sue everyone into oblivion, send Wells notices everywhere, and threaten lawsuits. And now they're like actually engaging, issuing like speeches and letters and comments on like how this thing should work and how they're viewing the market. But obviously what it comes down to is like what's in this clarity or whatever the market structure bill is going to be called. That's the be all end all.
I mean, the thing is with this stablecoin bill, it's kind of the same period where Circle now goes live, does an IPO, gets a lot of traction, does a 4x in like 2 days or so, which makes me wonder who is going to be buying those ETFs when you also have blockchain infrastructure coming in, doing an IPO with Circle, Kraken, probably Ledger, Gemini. Like, is there still an interest into those ETFs?
Yeah, I mean, you're talking about the spot products, like not just Bitcoin and ETH, but these other altcoins that we're expecting to come to market this year.
Yeah.
I mean, even without this expected crypto IPO wave that's already started, as you pointed out, we didn't see a ton of demand for these products. I mean, like the problem is like everyone views the Ethereum ETF launches as kind of a failure. And granted, they were lower than what we expected, and we were getting ripped apart for having too bearish of a outlook on the Ethereum ETF flows when they first launched. But they basically underperformed our expectations, which were drastically underperforming most people's expectations. But part of that is because a lot of people in this space who aren't in the ETF space don't understand that the Bitcoin ETFs were the biggest launch ever, like absolutely massive. So like comparing anything to that is not really viable. So like even if you look at the Ethereum ETFs, they have like less than 10% of the assets that are in the Bitcoin ETFs. They have way less than 10% of the flows, you name it. They're still a tremendously successful category. There's a whole bunch of ETFs in the ETF space, in the Ethereum ETF space in the US that have hundreds of millions of dollars in assets. They're all profitable or at least break even theoretically in their own right. They all have decent amount of assets. Like it's a very successful new category. I don't know if that's going to be the case for all these altcoins. But that said, even if you have just a couple that you manage to get $100 million in assets in, people are using them to trade exposures, that's very successful if you're an issuer, and it's worthwhile to have launched that. So yes, it's possible that the infrastructure plays take away from some of the demand, but honestly, this is the way it should be. Like if you want exposure to a spot crypto market, you should be able to get it. You shouldn't have to like go through proxies. Like for a long time, the only way to get exposure to crypto in an ETF was through like investing in thematic ETFs. So they'll invest in stocks that are like, crypto miners and anything like tangentially related to crypto. There was a bunch of those that have been around since like 2016. But you couldn't actually get spot exposure. And then you had futures products launch, which again, better than nothing, but still a much less efficient exposure than just a spot ETF product. And now we're finally getting the spot products, and this is the way it should be. The market will determine, what ETFs are viable, where the interest is, and the ones that don't get enough assets will just close within a year or two. And this will be updated, determined by the market, which I think is how the SEC is leaning on this. I think they're going to let most of these things through and let the market determine what has value. So yeah, I think maybe the crypto infrastructure plays will take away some of the demand, but again, equity exposure is still very different from spot crypto exposure.
Yeah, but that's probably also the reason why most of the altcoins keep on falling. So I'm just wondering, like, nobody is buying the token, so where's the demand coming from? Now, looking at the Bitcoin ETF, how was the period surrounding the launch of the Bitcoin ETF for you? All of a sudden, you became the big, main character of the space.
Yeah, I mean, that was fun. The only reason we got there, like I said, I hinted at before, like we were out of consensus when we were saying that the Bitcoin futures ETFs were going to get launched. So most people, it wasn't even on their radar that we could get a Bitcoin ETF, which again, not as important as a spot product, which we also got right. We said the real thing that would drive demand was the spot product. And again, with that, we were early, like almost a year in advance when I wrote with our litigation analyst saying that Grayscale was going to win their lawsuit with the SEC. Mm-hmm. And I can't tell you how many people told me I was an idiot for saying that. But I was like working with the litigation analyst who covers like these types of court cases. So we were early for that. And so that's when our following really started building up because people are like, these guys are very bullish and they work at Bloomberg. They're not just like some random crypto company, which I guess helped along the way. But we've been fortunate to be right on the vast majority of our calls. And it was exciting. We were at the center of it. Like I went to PubKey, which is a bar in New York City that focuses on Bitcoin on launch day. Yeah, it was weird. Like people were like, know who I am now when I go to these conferences. So it's a little weird. Like I've been going to conferences, but I've been covering this space since 2017. I first started writing. So personally, I've been interested in it since at least 2016. We can go back to 2011 when my suite mate was mining Bitcoin in college. But like 2016, I got invested personally, or like interested at least. In 2017, I was covering those Grayscale products that traded at premiums and discounts. So I cover the whole asset management industry. So I was writing about them like closed-end funds because I love talking about premiums and discounts and going into why they're happening and when they could collapse or expand. And so that was what a lot of my research was prior to this. But yeah, it was very exciting. But I do have to say one thing we did get wrong, which if you talk to every issuer, we did not think the Ethereum ETFs were going to get approved. There was no indication that they were going to get approved until all of a sudden. Fortunately, we were wrong in saying that we didn't think they were going to get approved last May. But we were able to be the ones that broke the news that they were getting approved. So the two sides of the coin, I guess. We were wrong on that, but we were the ones that eventually that broke that we were wrong.
Now, if you are so long in this space, how big was the approval of the Bitcoin ETF for you? As in, it felt like it's the big milestone that we were finally able to achieve in order to get more adoption going. Is it like the same for you as a journalist or like focusing on this particular part of the market?
Yeah, I mean, the main problem with all of that was the Winklevoss twins filed to launch one of these things in 2013.
Mm-hmm.
And realistically, the market could not have handled one of these, in my opinion, until 2020, right? That just wasn't set up, maybe even 2021. But like once they started denying after 2021, like that's when things were like, come on, guys, like this is getting ridiculous. And Eric Balchunas, my boss, and we were very vocal saying that we disagreed with the way the SEC was handling this. We did not think it made any sense. We didn't think it was right. And fortunately, the courts agreed with our opinion on this. And yeah, I mean, it was a massive milestone. I mean, it was the first time you got a digital asset into an ETF wrapper. But again, it was also kind of like a relief that it happened. It was a big relief because we were very vocal and known for saying it was going to get approved. And we were pretty confident, but like still, until you see that approval, it's kind of like, are they going to pull the rug out? Like, could we be like end up with cake on our face and look like complete idiots? But yeah, no, it was a massive event. And then you look at what happened with the flows in the following months, and you had so many people saying the flows weren't going to be big enough. Any money coming in was going to be just coming from Grayscale's trust leaving. Nobody's actually going to buy this thing. It's going to be a dud, and it's over 45 billion in net flows in a year or year and a couple months, right? So yeah, we were right to be very ambitious. We thought this could be the biggest launch of all time, and we got all of that correct. And as far as IBIT goes, it's the fastest ETF in history to 70 billion in assets. It did it in, I think, 341 days, so a little over a year, trading days, and I don't know the exact number, but it doesn't matter. The next fastest was like almost 2,000 days. So like it's breaking every record you can think of. A lot of that has to do with obviously the flows that you're talking about, but it's also the price performance of Bitcoin over the time. So assets is determined by two things and two things only. It's determined by, well, maybe some others, but it's determined by how much money is coming into the fund and how the underlying asset is performing. That's why the Ethereum ETFs, they launched with 10-ish billion because ETH converted. They ended up having like 5 billion at one point when Ethereum was down under $2,000 a coin, right? So now it's back up and they're around 10, 11 billion in AUM, but still they're basically only a little bit positive where they were, despite owning way more Ethereum, despite taking in $3.5 billion in flows since launch. They're basically flat on assets because Ethereum has been a massively underperforming asset, which, yeah, I'll stop there, but yeah.
Yeah, until recently, Ethereum was very painful. Now it's outperforming slightly.
It's got momentum.
At least for now. Let's pray that moment. Yeah. But if we go back in time, I think you guys were on top of it and quite clear on the launch date and all those things. But then, I think it was September or October, we had the Cointelegraph internal. Like,
good times.
How was that? Like, did you check your phone and you were like, what the hell is happening? Or
so I saw it, and so there was two things. So the Cointelegraph intern tweet, I saw that and I was like, this is not true. Like immediately, I knew it wasn't true. And I was like, either they got hacked or somebody doesn't know what they're talking about. And then I was like, I did my work, and I think you can look in the actual like original tweet. Actually, it's been deleted, but like I commented because everyone was tagging me like, Jay Safe, Eric Balchunas, like, is this real? And within like 5-10 minutes, I was like, this is not real. It's not approved. So I was very confident in that. But then also like I kind of got in a little trouble for saying that because they were like, you shouldn't be like answering those questions like you don't know. And I was like, no, I felt it was in my wheelhouse, and it was like in like the public interest to like, you know, say that this is not true, and we're pretty confident it's not true. And fortunately that ended up being right. But the other one, that was the SEC got hacked and they tweeted out the approval, and I fell for that one. I thought that actually happened because I was like, this is the official SEC account and all that stuff. But the Cointelegraph intern one was interesting to say the least. And like when you looked at, they did a story on like how it happened, and it's just like reciprocal of like people saying it's getting approved and then like somebody just believing that it was getting approved, and there was no real evidence of it.
It's just like the meme where someone starts saying something and then all of a sudden it comes out at the end completely different, or like funny. Anyways, the Bitcoin ETF is by far the most successful one, and I just had a show with Willy Woo, on-chain analyst for
Okay.
Swissblock. And he basically provided a document and an analysis that right now there's kind of no spot demand into Bitcoin. Or at least it's primarily, if we look at the current price movements, it's primarily liquidations. But if we look at the inflow of the Bitcoin ETF over the past 1.5 months, I think it's still like 1.5 billion or so. Like who's buying now, and what's the current status of the Bitcoin ETF in general?
Yeah, I mean, if Willie's looking at the ETFs, I think there is spot demand buying for the ETFs, right? So I don't know the exact number over the last month. I'd have to look it up. I can if you want, but the one I'm looking at is like from there was a huge pullback earlier this year in 2025, basically in the first quarter, but it went into April a little bit. There was like over 5 billion that came out of the Bitcoin ETFs. I think, and I wrote at the time, that I thought a lot of that had to do with the basis trade, which would be congruent with what Willie was saying. The demand wasn't from spot buying. It was from like derivatives and basis trade. And for your listeners who might not know, I'll just explain it really quickly. The basis trade is you sell the futures forward. So like a future expires every month, it rolls every month, and it sells at whatever price. And usually there's a slight premium on that. So it's selling at a little bit more expensive than what the cost is of spot Bitcoin. And what a lot of financial institutions, hedge funds, people like that, they'll sell that futures contract forward 1 month or 2 months, and then they'll just offset that by buying the spot Bitcoin ETF. That created a lot of demand from roughly around November when Trump got elected. That was a huge boon in demand for these ETFs, both Bitcoin and Ethereum. They both were huge parts of a basis trade through at least January into early February. And then money just poured out of all of them. 1 billion came out of the Ethereum ETFs, 5 point something billion came out of the Bitcoin ETFs, and that was through like April 20th, 420. And then since then, they've both like rocketed back up, right? So Ethereum, Bitcoin ETFs have taken in like almost 9.5 billion, I think, since then, over just the last couple of months. I mean, we're recording right now on June 20th. So it's been an insane whirlwind of money coming in. The flip side is the money coming to the Bitcoin ETFs. Obviously, some of that I'm sure is basis trade, but part of what happened with that basis trade, when you look at that yield on an annualized basis, back in like November, December, early January, that was double digit yields. Like virtually, it's not completely risk free because there's obviously settlement risk and what have you, but like almost risk free returns in the double digits. So that's why so many hedge funds and traders and institutions were pouring money into this. Even one of the endowments, everyone looked at like a pension that bought the ETFs, but they sold before the third quarter. Before the end of the first quarter. They were involved in the basis trade almost certainly, right? So they were long 500 million of the ETF, but they were also short 500 million of the futures contracts. But that yield hasn't gone back really into the double digits for any sustained period of time. It's still like, I don't know what it is, but last I checked, like 8%. So the money that's poured in, that 9 point whatever billion into the ETFs, is largely not going because of that basis trade. It's not short term. It's not just picking up yield. It's actually buying of the Bitcoin ETFs. That's my personal view, at least the majority of it. So where is it coming from, you asked? Well, it's a long answer, but the short answer is I think a lot of it is advisors and long-term buy and hold investors on the ETF side, at least. Ethereum might be a little bit heavier. Like I said, they've also taken in, they lost 1 billion. They've taken in 1.3-ish, 1.4 since then. I think that is a little bit more heavy on the basis trade because the yield is a little bit higher on the Ethereum side.
I think back in those periods where the markets were basically just collapsing, kind of. March, April, Bitcoin hit like 75K. I think also the Nasdaq and all came down. During that period, pictures were shown of the futures short positions on Ethereum and Bitcoin going to all-time highs. And people were saying, yeah, so everybody needs to be short squeezed from here. But that's actually just, as you're saying, institutions doing the basis trade, if I'm correct.
Yeah, but that basis trade was unwound for the most part. So like if you look at the reason I say I can confidently say I don't think a ton of the demand for the spot Bitcoin ETFs is from that is because I can look at the open interest in those futures contracts and I can see it hasn't gone like through the roof. It peaked in like I think February. So it's still relatively high, but like it definitely peaked in February. So you can see that like despite all these assets coming in, they're not open, at least on the CME futures contracts. Theoretically, they could be doing with over, exchanges that aren't, CFTC regulated. But for the most part, that's what a regulated institution is going to do. They're going to use the CME contract.
Yeah, that's also the picture that was shown on social media, and then the Web3 degens were saying, yeah, so we're going to go up from here because everybody is short, blah, blah, blah. But there's more underlying thesis than just plainly saying that. And that is basically bringing me to like the general macro portfolio that institutions are holding, or like the 401ks. Is there also a shift now when Trump got into the office that there's a larger portion being allocated into Bitcoin through the ETFs, and also a shift from US investors holding spot Bitcoin now transferring over to Bitcoin ETFs because they can get an LTV out of it? Do you see any shift in that perspective?
So I think it's happening. I have no way to quantify how much of that is happening. I know for a fact I've talked to people who've done it. They had a stack for many, many years, and they basically have taken some of it and put it in ETFs. Usually they'll use like multiple ETFs for this because if they have millions of dollars in Bitcoin. But they're doing it more for planning purposes. I don't know if they're necessarily doing it for the marginable reasons. And now also I think if that was happening Ledin is a great provider. Strike is now doing this. So like if you have Bitcoin, you can definitely get loans on your Bitcoin, and the competition is growing. Rates are falling for doing that. I think I saw Strike was under 10% now. Ledin's over a little higher than that, but lower minimums. So like there's ways to do all this. So I don't know if like the being able to margin your Bitcoin ETF is like a reason that so many people are moving stuff over there. I think the people who did it or are doing it are more doing it for like planning purposes. It's a lot easier like to take something that's in the traditional financial rails and like put it into your system, especially if you have an advisor like I was talking about. The advisors are probably some of the biggest buyers of this moving forward. It's just easier to put it in that ecosystem, whether it's like continued planning, like if you pass away or any sort of thing along those lines, or like figuring out how to pass it along to your heirs. And if you just have like a financial plan with an advisor or somebody directing you, it's a lot easier to have it all under one umbrella. And also if you're the advisor, it's been more beneficial to you because you can charge a fee for, managing those assets that now fall under your umbrella where you charge a management fee. So all of those things I think are slightly contributing to it, but I really don't think there's like a ton of people who are like selling their Bitcoin and buying the ETF. I know it's happening. I know a bunch of people, but I don't know how much of it.
Well, Plan B has done it. He's one of the core Bitcoin stock to flow model preachers for the past 8 years. And he tweeted about it that he sold his Bitcoin and bought the ETF for whatever reason. I think it was the security reason, but there were multiple rumors surrounding this. Now it brings me also to like questioning the ones that are buying the current Bitcoin ETF. We have seen a big sell-off taking place in April. Are those having like a 10-year vision? And is there actually if you can see that, a rotation between gold and Bitcoin taking place on certain moments? Like for instance, during the April crash, gold was actually going up and Bitcoin was going down. So can you see that there is a rotation in the data? Or?
Yeah, so I don't know how much of it is gold versus Bitcoin. I think that's something that everyone likes to talk up, like if Bitcoin is going to overtake gold and all this. I view them more as like more complementary than adversarial. Right, they do different things. Gold is way more stable. And if you look at what you were talking about, gold did tremendously well earlier this year. Bitcoin ETFs shot up to like 130 billion in early January or late December. I don't remember exactly when. And they were like 100 or 124 billion. And gold ETFs US were at like 130 something billion in AUM. But then money started pouring in. Gold ETFs went up to like 180, and Bitcoin ETFs went down under 90 billion in AUM because gold collapsed in price. So gold went up a lot, Bitcoin went down. So I guess there is a bit of an inverse relationship there. I think some of that has to do with Bitcoin does have somewhat of a more correlation to risk assets and like equities, the S&P 500, you name it, than gold does. Gold is pretty much correlated at like a zero level. It's completely not correlated. It's also not inversely correlated, which I think a lot of people mistake. They think like you're going to buy gold and it's going to go up when equities go down, and that is definitely not always the case. It happens, but it's more like gold beats to its old drum, right? It's a hedge against currency debasement, which I think Bitcoin could be too, but the way I view it is, yes, gold is likely, I mean, Bitcoin is likely taking away some of the demand for gold ETFs. I do think that's 100% the case. I think people are thinking about it. I'm going to buy some digital gold with my gold. But I also think they're both like going to be accepted as store values in the long run. And one is a more high vol store of value, and one is a more low vol store of value. One is more stable, and obviously that's gold. But there's obviously, theoretically, there should be more upside for something like Bitcoin if it is to become like a globally accepted store of value. So there is a little bit of that like ebb and flow, the give and take, but I don't think it's not as clear to see that, but it is happening. And I think it's more from people view mostly, though BlackRock would disagree with this, and I could get behind their argument. Bitcoin is a risk-on asset. It's a risk asset. Gold is a risk-off asset. And that's the way the flows treat them, right? That's how we see investors are treating them, despite everyone out there and their mother, who is a believer in Bitcoin, think it's a flight to safety. It's not being used that way, at least in markets right now.
I think it will stay like that until it really, really matures. I think like maybe 10 years down the line, all of a sudden Bitcoin starts to act like gold. But the history has proven that once it turns to become risk off, Bitcoin goes down. And I think the only exception we've seen is due to the ETF being approved, that there is so much inflow in the Bitcoin ecosystem that all of a sudden Bitcoin's price started to skyrocket. Otherwise, I think we wouldn't have seen any new all-time high taking place as of yet. I think so much valuation has come in through that ETF that is basically pushing us above 100K. But we also have a new beast in town, which is for unknown people trying to bet on a leveraged position in Bitcoin was through MicroStrategy. And now there are like hundreds of copycats doing the exact same. I just saw some tweets coming in from people that are having a public account announcing that they become the Bitcoin strategist for a certain listed company. How are you viewing that, like, development of Bitcoin treasury companies?
Yeah, let me preface this by saying I am definitely not a Bitcoin treasury expert. I have my views. I am more educated than the average person on it, but I would definitely not say that I'm an expert. That said, I'm a huge fan of Michael Saylor. What he's done is extremely impressive. He's been trying to get people to do this playbook for the last like 5 years. Like, I feel like he's been doing conferences being like, everyone can do this, and no one had done it. And all of a sudden, a couple of people started doing it. You saw the success of Metaplanet over in Japan, and it's completely taken off. I just don't know what the downstream effects are. I feel like in this space, and really in finance and anything in general, we tend to overdo things. And at some point, there's just going to be too many of these things. I should also say when I think about this, there's two different things, right? There's two different ways of doing this. Some people are doing this as a diversification for their treasury strategy in a company, which is like more similar to like an individual buying Bitcoin as themselves for a store value, a hedge against currency debasement, you name it. They're just buying it from cash flow or selling other assets or whatever. Then there's the whole other thing of what you're talking about, I think, mostly is like the Metaplanets of the world, the MicroStrategy. They're using the financial markets, issuing debt and leverage to obtain more, worried about the MNAV premium and things like that. So we're seeing more and more of both of those types of companies come to market. So my main worry is like at some point, whether it's the 95th Bitcoin treasury debt issuing company to buy Bitcoin or the 400th, like at some point the market's going to get saturated. I mean, I think it kind of makes sense if you have one of these in each jurisdiction. Maybe you could have more. But it makes more sense in some jurisdictions than others. Like Japan particularly makes sense because the tax rate on Bitcoin and digital assets is so much higher than other things. So there's kind of like an advantage to buying it through a wrapper like Metaplanet as a Japanese citizen. So there's like and also there's still a lot of things out there that cannot buy digital assets. Like that was a huge thing for the ETFs. Like I mentioned, advisors are buying it heavily, but like also institutions are buying, because even if you're an institution and you wanted to buy exposure to Bitcoin or crypto, you couldn't do it likely because your like bylaws and the regulations or whatever you signed up for in that trust says you can only buy securities or what have you. That's very common. And an ETF basically takes that and puts it into a security, in a security wrapper, and then all of a sudden you can buy it. And I think kind of the same thing happens with some of these treasury companies, if you will. So yeah, I mean, they're a huge buyer. They're a huge impact. My view is right now they're hoovering up a bunch of coins. I'm shocked the price isn't higher with how much buying we're seeing from these things, which is a little bit scary. As you mentioned, Willie was like, it's a lot of selling of spot. It's just kind of crazy to me. And I just think there's going to be stuff is going to be sucked up. And some of these companies, not all of them for sure, or at least I hope, are going to end up coughing these coins back up at some point in the future when there's a pullback. And is that pullback going to be, I don't know, from 120 to 75 again, or is it going to be like from a much higher level back down to like where we are now in the hundreds? Like, who knows? I'm not I'm not making those predictions, but like I just think at some point some of these companies are going to have to cough up some of these coins.
I think what all these new companies forget is that MicroStrategy started at like 20k, and they are basically starting at 100k plus, which is a lot more risky in terms of where we are in the cycle. And that at some point, either the depth or the levels of the collateral, in the case of buying it so high, is going to be underwater, and that's where the risk starts to kick in and it rolls over. I think that's a big thing to realize when it comes to the upcoming bear market. And I think Willie also said that the ones selling right now are long-term holders who bought their Bitcoin between like $5 to $100. Those are the ones pressing the markets down at this point. So I think in that sense, it's just a matter of time before the markets are going to shoot up again. Now, we have been talking about the Ethereum ETF for a little bit. What was the reason that it didn't succeed as Bitcoin did, while everybody expected it to do really well?
I don't know that everyone expected it to do really well.
Well,
I mean, some of the issuers
some
didn't
people.
launch because, yeah. The ETH maxis, the .eths on Twitter expected it to do really well, and they thought they were going to see the billions that went to the Bitcoin ETF in the same way, going to the Ethereum ETFs, which, to be very clear, we were adamantly opposed to. Mm-hmm. Like I was saying, 15 to 20%, 25% max of the flows that went to Bitcoin are going to go to Ethereum. That was my view leading up to it. And we settled around the 15%. But I know some other people that were saying 10%. And honestly, until Trump's election, there was net outflows. So everyone was wrong. Anyone who thought they would get inflows was wrong until Trump got elected. There was almost $600 million of outflows, net outflows, because money pouring out of Grayscale's ETH. So the demand just wasn't there at the same level. Obviously, we've seen, I think right now, around 3.5 billion in net inflows for those products. So we're not even a year in. If you told any issuer out there in the world that you're going to launch a product, or you're going to, as a group, and you're going to get 3.5 billion in net inflows in 1 year, every single person would sign up for that, right? Like it's a success. So like that's the first thing we need to get out the door. But it's still less than 10% of the assets and flows that the Bitcoin ETFs have. The Bitcoin ETFs are like net 45 billion of inflows, somewhere around there. Again, Ethereum 3.5. The Bitcoin ETFs are like 130 billion in AUM. The Ethereum ETFs are 10 or 11. Again, less than 10%. So the same level of interest just isn't there. I think there's a few reasons to that. One, the big one I think is staking, which will be solved this year. There is no staking in the Ethereum ETFs here in the US, which at what is it? It's around 3% right now, something like that. For staking yield, maybe a little bit more. That's like taking cash and putting it under a mattress and just not earning yield on it, right? Like, so like if you can get exposure to Ethereum where you can get it via staking or get staking exposure, you're not going to buy the ETF. So the only people buying the ETF are people who can't or don't know how to get Ethereum exposure in any other way, because it's a more inefficient way. You're buying it, you're paying a fee to own it, and you're not getting staking yield. Not great. Mm-hmm. Two, Ethereum's just more complicated. I think part of, if Ethereum had launched like a year after the Bitcoin ETFs, or even 10 months, or got approved way longer after the Bitcoin ETFs, it might have been more successful. But like advisors and investors people who know nothing about crypto had just learned about Bitcoin, still didn't really know much, and they're like, what's this other thing, Ethereum? I thought Bitcoin was crypto. Like, what is the decentralized computer? Ethereum is oil. Like, what is all this? So like there was no common like narrative around Ethereum. It's a lot more complicated. If you pay attention to the space, it's a lot more complicated to understand what Ethereum is and smart contracts, all these things. And I think also part of the problem is Ethereum is much more so competing with a whole bunch of other competitors, whether that's Solana or like any other layer one chain that you can think of. It's a little more complicated than looking at Bitcoin. It's kind of a little bit more ossified. It's stable. It's a digital store of value. You can transfer it around the world. It's simple to understand. And then like all this other stuff is way more complicated. So I think all of those things kind of prevented it. And also, like I mentioned, like the fact that it launched so quickly after the Bitcoin ETFs. The Ethereum ETFs launched in the summer. There was not much going. It's not really usually a good idea to launch a new product within the next few months because things are just slower and easier. And people, I think, just didn't care all that much. So for all those reasons, yeah. And I think just if you're like a TradFi person, traditional financial person, you have a CFA or whatever, it's a lot easier to wrap your head around. I don't know, the digital gold, digital store of value. It's way simpler. It makes more sense. You're going to put in your portfolio in a sleeve. Whereas like trying to understand how Ethereum gets cash flows and all that stuff, I think could be very beneficial long term, understanding those types of things, but it's just very complicated.
I think Ethereum is for itself trying to build a narrative because they don't know what narrative they are following for or like going for. That's kind of what the Web3 space was like. Like, what is Ethereum right now? Is it going to be the internet or is it going to be whatever it is? I think right now with the regulation and the stablecoin and DeFi, it starts to pick up momentum again. But indeed, recently we saw, $1 billion in inflow in the past 5 weeks or so. Is the reason that people are buying the Ethereum ETF solely the reason that they're going to get staking and they just want to be positioned early, or what is the reason that all of a sudden the interest comes back in?
I think part of it is that basis yield I was talking about.
Yeah.
It is higher for Ethereum. So if you're a hedge fund and you're looking for trades to make double-digit percentage yields, for a while, even over that time period, the yield was fairly juicy in Ethereum. It's even more interesting when we get Solana and XRP because that yield is even higher. So I think part of that was the basis yield. I don't think it's people because I don't know, why would you front run staking yield? Like it doesn't make sense. So I don't think that's part of it. I think people are just betting more on like the ecosystem. Stablecoins is a growth point. We're going to get a market structure bill. I mean, honestly, when Trump got elected, I always thought that Trump's election, a new SEC admin, was going to be more beneficial for the likes of layer ones like Ethereum, more so than it would be for Bitcoin. Because Bitcoin, I thought, would have been fine even if we had a Democratic SEC and Democratic person in the White House, administration in the White House. I thought Bitcoin was going to be fine. It was these other things that were questionable about like what could get an ETF, what was a security, staking, does it make it a security? Like all these things, that would have been way more concerning under a Dem. So Trump winning, I thought, should have been way more positive. And it was initially. Like all the altcoins went up a ton when Trump initially got elected. They just completely ran out of steam within a couple months, right? And Bitcoin has still been the one that's pulling away. But who knows how long that will last.
I think it's also a lot related to risk off, risk on type of thing, where since Trump got into the office, like generally every crypto has been fallen back to its lows, except for Bitcoin, except for Ethereum. And then you also have like the case of other ETFs that everybody probably is aiming for, like looking for if they have a certain back of that particular position. And in one of your recent tweets, you said, if everything goes smoothly, Solana ETFs could be approved in as little as 3 to 5 weeks, which is July 2025. What's the time plan for all those ETFs? What do you think is going to be the first one of the category of like the fortune wheel of altcoins?
Theoretically, it should probably be Litecoin. Should be the first one. I would say that 3 to 5 week time range probably isn't our base case, but it could happen. The SEC seems to be moving on all these things. We think they're going to come up with some sort of a framework for, I kind of hinted at this earlier, like what is allowed in an ETF wrapper, which is, again, the complete opposite of what the prior SEC admin was doing, right? So there's a whole bunch of things that have been filed, and I think there's like 10 different assets. I can tell you in a second. But like we're talking about Cardano, Solana, XRP, Sui, Avalanche, HBAR, Polkadot, Litecoin, Tron, So we're pretty confident some of those are going to get approved this year. Like very confident. The timing is a little more unknown. So the final deadlines for the vast majority of these are October or later.
Okay.
But the SEC is moving now, so I think they might actually approve a bunch of these things early. The question is, are they going to do it in a wave? Are they let everyone launch at the same time, which they did for the Bitcoin and Ethereum ETFs, which they've never done before? Or are they going to let it go first to file, first to launch? So if you filed early enough and you worked with the SEC, you could launch before the other people. I don't know what they're going to do on that front. I
think it's always funny when I scroll through your tweets, like sometimes you're making like predictions in terms of percentages. And I'm just like wondering, like, how do you come up with those percentages for every particular asset? Like, for instance, I think recently it's 75% for Avalanche and then it's 90% for Litecoin and Solana. Like, why is it different for any sort of asset? Is there some sort of framework behind it?
Yeah, we're trying to come up with reasons on why we think they could get approved or not approved. So we're trying to figure out what the SEC might be looking at, whether that's like percentage of float, low float, high FTV type of thing. Could that impact it, right? I don't know if that's going to be included in the framework. Trading volume. Does it have a futures contract that's regulated by the CFTC? What is the market cap? What is the trading volume? Are they traded on U.S. exchanges a lot? Does enough of the volume come from like U.S. trusted exchanges, things along those lines? So we're trying to figure out, we're looking at all that. And also just like, is this clearly a commodity? Like Litecoin is like the easiest one. Honestly, I think Litecoin could have gotten through under a Gensler administration and it might even be launched already if Gensler was at the SEC. But they weren't going to let most of these other ones launch probably if Trump hadn't won. That's my view. So I think Litecoin just is the easiest one that we think is going to be approved. I don't know if it's going to be first, but they're working now. They had all the issuers submit documentation last Friday for Solana ETFs and to include staking. And I think that's more so just to knock out a few things with one stone, right? Like you're going to send these things. We're going to go over what staking is, what risk you have to put in your documents and all these things. Like we can go in the weeds of what these documents are, but really you just need to understand that like there's a lot of stuff online where people act like stuff in this documents is like has like alternative nature and like they're trying to do things that are bad. And it's like, no, they're literally just like, they have to say every single risk under the sun that could happen to these products. And that way, if it happens, they're not liable for not warning of the risk, right? Like it's a disclosure regime here in the US. So, yeah, I'll stop there. But I just, the odds are mostly like Eric Balchunas and I, like we had a call yesterday about this because we're probably going to change some of the odds. We're like, at what point would you make a bet? Like we're trying to, it's basically like at what odds would you still take the bet? So like if we're at like 90%, would you still take a bet that says like 90, like, 9-1 or whatever, like that it would get approved? Would you still take it? And so like that's kind of where we're trying to settle out. So it's very qualitative, not quantitative. But again, I mentioned a bunch of the things that we're kind of looking at to like kind of back into like what do we think the SEC is going to do? We're talking to issuers. We're looking at anything that the SEC is saying. Everything the SEC is saying is like positive and looking forward. So we're pretty confident that a lot of these are going to come to market this year, potentially this summer. That's why we're calling it a potential altcoin summer. But I wouldn't say it's like guaranteed to happen in the next 3 to 5 weeks. That's just a potential thing if the SEC really wants to move.
I'm wondering whether, I think there are poly-market bets on whether an ETF gets an approval. And I'm just wondering if any of your tweets are actually influencing the bets on poly-market. I don't know if that's...
It looks like some of them do, yeah.
It's actually funny, but then if you... Yeah, I'm not going to go down the road, but it's funny that... Go ahead.
I will say, our tweets were moving the market on Bitcoin and Ethereum like by serious dollar amounts. Like if you look at the percentage point moves on when we were tweeting things up positive or negative towards Bitcoin ETF launches from like August through January, to the point where people were reaching out to us and like, do you know you're moving the Bitcoin market? And we're like, our tweets are moving the price of a multi-trillion-dollar asset? I don't think so. And sure enough, we would like, okay, let's sit together and come up with what we're going to say here in case we are moving the market. And we tweeted out and we're like, oh shit, we are moving the market, because like you can literally just watch it tick up and or down, or when we're saying things. And it was wild, even like when things we were like, okay, this is going to be delayed. We know this is going to be delayed. A delay is standard procedure. Approval would be shocking, and they're not going to deny it. And still, delay would come out and price would tank. And like that happened for like 7 months. And I was like, man, I really wish I could trade this, because like this is going to be delayed. And if I would just short it today right now in size, but you know, who knows? But yeah, it's kind of crazy. But I'm not really allowed to trade the markets at all. So I need approval for everything I do, and they don't really give approval for any of this stuff. So there's no way to do anything there. But yeah, I don't know. It's kind of part of the job. We're tweeting things out. We're making breaking news, and I guess people care about what our odds are because we've been right most of the time. So I just hope that continues. But this is all way smaller stakes, in my opinion, than the Bitcoin ETF launch, and even still smaller stakes in the Ethereum ETF launch.
Well, at least Trump is able to do whatever he wants when it comes to the market. That's a different position, I guess. I think recently you talked about kind of basket ETFs, which have 40% Bitcoin, 40% ETH, or like 80% of these two, whatever it's divided, and then a bunch of other tokens in there. I think from my understanding, and if I'm running my own fund, if I listen to the clients, such a product would be interesting for a large group of audience. Like, do you think that is going to attract a lot of interest, and what's the status on like new products outside of plainly single altcoin ETFs?
Great question. So two things. One, two of the products here in the US, GDLC and BitW, are closed-end trusts that have applied to convert to an ETF. GDLC is due for final decision from the SEC on July 2nd. We are very confident that GDLC will be an ETF in 2025. We are not super confident that it's going to get approved on July 2nd. They could say we need to come out with a framework and we'll get there and this will be approved eventually, but we're just not ready yet. Or they could approve it. And the numbers you were talking about, it's actually like 80% Bitcoin and like 10% Ethereum in most of these, and then some other exposure. So it's like 90% on all of these Bitcoin and Ethereum. So for that reason, we actually think they could just approve these without a framework because it's such a small allocation of the pie, and they're working on a framework that will like get these things through eventually anyway. So that's the first thing I would say. I also said earlier that I didn't think there was going to be a ton of demand for these altcoin ETFs. That's true. I think there will be a lot of demand for these index products. Advisors, like I said, are some of the biggest users of these ETFs. I think they're going to be the biggest buyers this year of Bitcoin because they're going to be putting allocations in their client portfolios. And advisors they're used to indices. They use the NASDAQ 100. They use, emerging market ETF. They use the S&P 500. And just having an ETF that gives you exposure mostly to Bitcoin, which is probably what they want, and then some tail exposure to these other assets that could do very well. I think that's the way these things are going to operate. So I think the index products, while the individual assets in some of these probably won't do that great, some of them might even liquidate, I think index products are going to be a huge hit. So I think so I don't think they'll take over, Bitcoin ETF size. Maybe not even Ethereum, but they could take over Ethereum size. So I think they could be the second largest category in the crypto space. That's my base case, but we'll see.
Ultimately, if it's going to like get more interest than the Ethereum ETF, underlying it's going to bring a lot of money into those particular assets anyways, as they need
Correct.
to hold it as collateral in that case. So it might be positive for the entire crypto sentiment or crypto markets if these products become live, which, like for instance, if you have $1 billion flowing into Bitcoin, it has a certain impact on the Bitcoin price. But if you have $1 million flowing into a smaller asset, it's also going to have an impact into that particular asset, right? So what are going to be other products that you're looking for when it comes to financial instruments on crypto in the US in the coming 6 to 12 months?
Yeah, I mean, the main one, there's a whole bunch of products that, one of the big things here in the US is a lot of these products are options overlay, so they're generating yield. Staking will be huge. I think that will be approved this year. We're pretty confident in that. But like leverage products on individual assets, we've seen that already filed for some like meme coins and stuff. We'll see if that gets through. Those won't be spot products, but options overlay type products. And then also like one thing I think that should be in the market that's not even filed for yet is basically everything but Bitcoin crypto. I think a lot of people view things, I personally do, as Bitcoin and everything else. They're kind of like, they're not exactly competing in the same worlds as far as I'm concerned. I know some people will say that they are, but I don't view it that way, and I think most people don't view it that way. So like I think it might make sense to actually have an index product that is everything but Bitcoin. So you can choose how much Bitcoin exposure you want, and you can choose a market cap or whatever weighted exposure to another index that's like the smart contract platforms and things along those lines. So I think that will come as well in the next year or so, just because it makes sense to me. But who knows?
Now, if you look further down the line, like let's say 5 years from now, what's your biggest worry when it comes to the crypto market or the ETFs?
The crypto market?
Yeah.
I mean, really, it's these. There's treasury companies popping up for everything. There's one for Tron now. There's Ethereum, Solana.
Oh, really?
Yeah. So like, I don't know, something along that just seems like an area where there could be a problem. Maybe it won't be. Obviously quantum computing, but I think that's a little further out. Mm-hmm. My main concern is just like this has become so accepted and standardized that I just hope like nothing actually breaks at like a protocol layer for some of these big names. Mm-hmm. But I don't really have any massive outsized concerns. I think most people that are investing in this space and toying around in this space know it's very risky. No, it's extremely volatile. Though I will say we were talking about Bitcoin versus gold volatility. Bitcoin volatility has gone way down since like 2017. Like it's like, yes, it still looks like it's crazy and the dollar amount swings are insane, but as on a percentage basis, the volatility has gone down tremendously. Well, tremendously might be a little extreme, but it's gone down a decent amount, and the trend is very clear that it's continuing to go down. So I think that will happen. But yeah, risks, I don't know. Yeah, what I just talked about, some derivatives or these people issuing debt, leverage. But right now, the leverage in the system doesn't seem to be too extreme. Not nowhere near the levels we saw like at the peak in 2021 with a lot of these centralized exchanges that were issuing leverage without any real collateral, which I don't think is going to happen anymore. I mean, there's some sort of collateral. The only people issuing debt without any real collateral are the ones that are the Bitcoin Treasury companies. So yeah, those are my main concerns. I think, like I said, I think at some point some of these guys are going to cough up their coins. I hope I'm wrong, but I think whether it's a year or two from now or 5-7 years from now, I think there's going to be at some point where some of these companies end up coughing them up, because I don't know if they'll have the steadiness and stalwartness that Michael Saylor showed in the last drawdown.
I recently read his book, The Mobile Wave. It is from like 2008. And even though I've read it a few weeks ago, it's still so good. So he's a super smart futurist and he knows his game. And I think if people want to compete with him, then they will probably have a really cold shower at some point. Anyway, if we look at risks, we also see 200 stablecoins being launched. 3 years ago, the crypto markets were crying over an algorithmic stablecoin that collapsed, which was called Luna. And now all of a sudden, we are cheering for new stablecoins to be rising and new algorithmic stablecoins to become alive. How is the bill going to change that? Are you seeing any risks in the entire stablecoin structure that we have in the space?
Yeah, I would go back to say like this is part of an overarching trend that is where I find my expertise and where I'm covering and what I'm watching. And it's really just overall, this merging of TradFi and DeFi. Mm-hmm. Everyone's creating bridges. And the way I think about it is stablecoins and ETFs, they're a version of this bridge. BlackRock's Biddle Fund, and there are all these companies at the center are creating bridges to merge TradFi and DeFi. So you're taking DeFi assets like Bitcoin and Ethereum and putting them on TradFi rails by putting them in an ETF. And you're taking things like money market funds like BlackRock's Biddle or stable coins. You're taking dollars and treasuries and taking that TradFi asset and putting it on DeFi rails by tokenizing it. And I think that's the overarching trend. So like, as far as you're talking about, the concern that I'm worried about is like, there's a lot more mixing between TradFi and DeFi, and there are a lot of risks in DeFi. So like the contagion from a DeFi blow up going into TradFi is definitely concerning. But at the same time, I think this is the right way. There are risks and we have to move forward. And like people pushing the envelope, typically younger people, are probably doing it the right way. I just hope that whatever negative side effects are, they aren't too bad. And as far as the stablecoin bill goes, I mean, I kind of view, I think Bitcoin is great as, you know, when you think about money, it's a store of value, medium of exchange, and unit of account, right, are the three main things that people tend to talk about. I think Bitcoin has won or will win the store of value. I'm not so confident on the unit of account, medium exchange, and I think stablecoins are filling that need. A lot of people in crypto think the dollar is dead, the dollar hegemony is going away, and it just keeps getting stronger for the most part. I mean, the dollar's down this year. But for the most part, people want dollars. You look at what's going on in, you know, third world countries, people that are subject to extreme inflation, they're using stablecoins. They're using Tron. They're using Tether on Tron, right? So I don't know. I think it's a good thing. I'm an American, though, also as well. So I think I've been saying it's insane that we're not promoting stablecoins. Like, if anything, this is promoting U.S. dollar hegemony. It's like more buyers of U.S. treasuries, which is something that the U.S. government is worried about. And as much as I am worried about the debt ceiling and what have you, like, this makes sense, right? Like, there's people want this exposure. You basically get to go around the governments and just hand dollars to citizens around the world. So I don't know. I don't know if that's necessarily a risk. I think that's probably a good thing for the U.S. government. I think the Treasury Secretary, Scott Bessent, believes it's a good thing. I think most people in Congress understand that it's probably a good thing. I think the banks don't like it, which is why none of these stable coins, it seems like, under the way that the bill is written now and likely to be finalized, they won't be able to issue interest to their holders. So I don't know. I'm worried about it again because, you know, it's this merging of TradFi and DeFi, and there's potential more contagion risks as this merge keeps continuing. But I don't know. Overall, I think that we're heading in the right direction, and it's a good thing. And I think stablecoins are one of the few areas where crypto assets or crypto technology has truly found product market fit. And I know people are like, there are cypherpunks that are really upset that like all you did was take, you know, US dollars, the thing we don't want, and put it on an exchange, and it can be completely seized and frozen by the issuers, whether it's Tether or Circle, you name it. But I mean, it's serious product market fit, and this is what people are using around the world.
I think it's so funny that for years and years, Tether was flamed on social media for being the company as they are, while they are the most, I think, cash flow positive company in the world. And then second, it's Circle. And now all of a sudden, more stable coins want to be the exact same. I think it's kind of funny where everything just comes around.
Well, I mean, there's going to be competition in the space, right? Like, they're not going to be able to just take all that yield for themselves. Maybe Tether can, because they have such a moat around what they're doing, and they have fantastic distribution all around the world. But there's going to be competition in the space, and they're going to offer different things, and competition is a good thing. And as long as it's like, I mean, like you said, it's hundreds of stable coins. I mean, if one stable coin blows up, it won't be the end of the world. Banks do implode, and FDIC has to come in here in the U.S., the insurance, and take care of it. So it does happen, but I mean, obviously, I don't want it to happen. So
me neither.
Yeah.
Maybe Trump's company comes in through his Liberty Finance to save the markets. Thank you very much for being on the show. Where can people find you if they want to understand more about ETFs, see your predictions on every sort of ETF that's going to go live or not?
Yeah, I mean, if you are a Bloomberg Terminal client, which I understand many people are not and can't afford to be, that's where all of my stuff is. That is where I am most available to talk. That is where I'll answer pretty much any question that a client asks me, and that's where all of our research is and data that we're putting up. But for most people, it's likely Twitter or LinkedIn, but I'm much more active on Twitter, so at JSEYFF. And yeah, I respond to a lot of crypto stuff, but like I don't just cover the crypto markets. I cover the asset management industry. I'm covering closed-end funds. I'm covering mutual funds. I'm looking at active versus passive. Actually, that brings me back. You asked me a question about other things I'm expecting. I think there's going to be a lot of actively traded ETFs in this space. It makes sense. There's some areas where passive investing makes sense. There's some areas where active, and I think how volatile and unique this market is and under researched by traditional markets, active ETFs could be huge. But yeah, JSEYFF on Twitter is probably the easiest way for most people to follow me.
Yeah, I'm not a client of a Bloomberg terminal. I've seen the prices. It's a little above my head, to be fair. Anyways, thank you very much for being here. Would love to have a conversation with you again in a year when all the altcoin ETFs are live and see how that progressed. But thanks for spending the time and producing all the content and value to the space regarding the ETFs. It's very helpful, easy to understand. So thanks for being here.
You're very welcome, Michael. Thanks for having me.